Hello and welcome. I'm Lala Rimando. Today we are with Bob Herrera-Lim to discuss the peso and why it's the worst performing currency in the region right now. Hello Bob, welcome to Rappler.
Thank you. So to answer your question in a brief sense, I think if you're talking of the really just the short term of the past few weeks, because we've seen the peso go down from 46 a year and a half ago, then to 48 maybe 6 to 8 months ago, then where it is right now at 50. If you're talking just like the last, because 50 was sort of a psychological,
it
was
barrier.
A psychological barrier. But if you take a look at the decline, it's been consistent. It's been going down for the last, I'd say, year. So, but if you're talking the last few months, it's really there's a differentiation being made now. Some countries have, and I think it's on the current account. Some countries, such as Thailand, have good current account balances, and therefore they are perceived as being better able to weather risks down the road. Whether this is a risk from
the Fed,
the Fed raising rates, or maybe an external shock, maybe a eurozone crisis again if they're not able to resolve something, or maybe a Brexit shock if you see that down the road. So those countries with good current account deficits are seen as having the ability to absorb these kinds of shocks. And the Philippines, maybe for different reasons, whether it's stagnant semiconductor export growth, or maybe a sense that foreign exchange remittances from our workers might be declining, is seen as not as robust as these countries. So I think right now, if you're just talking of the last 2 to 3 weeks where we've seen this, it's more the current account technicals that maybe foreigners are looking at. We're not seeing any strong political noise that would seem to justify it. You always have political noise in the Philippines, right?
Yes,
but
yes.
I don't think it's the most urgent driver for how we've seen the currency move in the last couple of weeks or so.
Current account deficit, what? We're at 0 to 1%.
No, I think we're still at surplus, yes.
We're still at surplus,
yes.
but we've had some deficits some months back.
Yes.
We came from what? A surplus of 3 to 4% of the GDP a couple of years back. And then, don't you think it's also a factor of growth? Because we're growing at a faster rate than how we're used to. And obviously, that also comes with more imports of things that we need also for exports. So why is the current account deficit the main story now when it can actually be justified?
I think there are two things. Again, it's a rough measure of vulnerability, right?
The current account deficit,
yeah.
okay.
How robust, how strong your current account is.
The level right now.
Yes,
okay.
So it can be because of growth, but it means that if there's a shock, you will be, as a country, less able to withstand it. In the same way, like if a bank, right? If the economy is growing, then the bank lends a lot of money. People are saying, okay, that's fine, it's growing, it's making interest. But also there's a perception, what if suddenly the economy slows down and suddenly people stop paying their loans? So the banks that don't have as big of a cushion in terms of capital are seen as possibly being more vulnerable. So I think it's not an exact analogy, but it's a vulnerability created by conditions. As you said, it could be because of imports, it could be because of other negative structural factors. But in the world
or
of
as
finance,
you mentioned a while ago, exports.
Yeah. So in the world of finance, they just you're asked to choose between investing in maybe 10 or 15 emerging markets. So they look for what are the quick and good measures for the moment of seeing which ones could be vulnerable in the short term. And
the flavor right now is current account.
Is probably the current account deficit or the current account position.
So it's just it's basically what you're saying. It's timing. At the moment, or at least since the time that the peso has been deteriorating to the levels that makes a lot of people also nervous, 50, it was the current account deficit.
Yes,
we don't know next time what will be
the
next measure.
The concept of structural reform, right? They'll say, oh, which countries are structurally more able to implement reforms down the road, whether it's tax reforms to cope with slowing economies. That could be the flavor of the day. If oil prices move up or down significantly, it might be, oh, the resource producers might be the next ones who are seen as vulnerable. So, or if something bad happens to oil, let's say oil goes down again, and then people say, oh, Saudi's going to suffer, which is the source of Philippine OFW remittances or the Gulf, then that might be the flavor of the day. Who are the remittance countries, right? You've seen Mexico suffer, go up and down depending on the perceptions of how trade and migration will flow depending on what the new U.S. administration does. So I'd say it's It's the flavor of the day.
Okay, but since we've reached that psychological level of 50, and well, common consensus is that we'll be trading between 50 or at the worst even 52 this year, then it means that, what does it mean to us Filipinos? Because essentially they always say that if the peso is at a certain level, it's good for this sector of the society. Let's say if it's at a weak level, 50-ish, it's good for the OFW families we have a lot of, and the exporters. But if it stays for a long period of time at that particular level, it will also be bad for the importers, for the other sectors of the economy. So when do we reach the happy balance?
That's something the market determines. That's something our policymakers try to think about, because if you depreciate too quickly, then you have inflationary issues, right?
Yes.
So you have inflation, but on the other hand, as you said, a weakening currency makes you all things equal. And that's always the difficulty, right? Right now, all things are moving at the equal time, right? So all things being equal, it makes you more competitive. It makes your labor sector more competitive vis-a-vis international. It makes your exports more competitive. But at the same time, it can lead to inflationary pressures. It can lead to a certain amount of political discomfort, right?
Yes.
Because we have a plan to raise fuel taxes.
Yes.
So if fuel taxes go up and then you have inflation, people feel worse, then that might be an effect that's undesirable from a social point of view. So what is the optimal? It's very difficult, and that's what the central bank. That's why we look to the central bank for signals. How is inflation looking? Is it within the range that you are targeting? We ask. Obviously, we'll take a look at exporters, if they are being helped, or at the end of the day, even if you have a more competitive exchange rate, if suddenly there are more trade barriers globally, if our major export destinations, maybe they could be China, maybe they could be the US. What if they start increasing tariffs, or they start seeing slowdowns? Then how does that affect us? So it's difficult to look for an optimal. It's difficult to say 51 is optimal versus 50. Some sectors will say we're happy with 51. Some sectors will say no, we prefer something. It's difficult because we don't fit the traditional profile of a manufacturing economy. We're not we're not a country that's, that a large percentage of its foreign exchange revenues are manufactured exports. So there's not an exact one-to-one, or there's not a strong correspondence between the two. It might help our manufacturing sector grow, which is what we've been trying to do for as long as we can remember, right? Yes. So maybe it helps move that along. So if we are seen as, hey, you have a good pool of labor, etc., it could help. But again, saying that one is better than the other might not be, it's difficult to make that call.
And it's also difficult to assume that there are some speculators out there who are, trying to tip the balance. And that's why the central bank has been very careful in its messaging as well, when it will intervene in the market, or if it will even intervene.
Well, there will always be speculators.
Okay.
It's a part and parcel of the foreign exchange markets. I think what the central bank always has signaled is they don't aim for specific levels. What they do try to manage is volatility. And you'll see that, right? If they feel it's going down too fast, too quickly, or going up or down too low, as long as it's within reasonable bounds of what they're trying to do, they'll try to manage volatility. I think that's been the clear behavior of the central bank for years, or even a couple of decades already. So I think that's the first thing. So again, are there speculators? There are probably. Are they aiming to bring the currency down to a 51 or 52?
And why would they even do that unless they're up against?
Not unless they have some big position, but I don't think we're that kind of target yet. Right? You do that if suddenly we had some really bad numbers. If we had suddenly the banking systems had a debt issue, or our companies had foreign exchange liabilities that were unsustainable, then yes, somebody might say, hey, we're going to go big into this. But I don't think we have some outsized vulnerabilities, if you want to call it that.
We have someone from social media who sent in a question, Joyce Guito. The question is, weak peso is good for the OFW, but this could lead to price inflation. Imported goods will be more expensive. The question is, what happens to the surplus? what happens to this current account surplus, I guess?
Well, eventually, if things work out and the currency weakens, then people start buying less and fewer imported goods. Companies might say, okay, we'll have to scale back on some capex, the importation of machinery, and then you have more exports. Eventually, that's the purpose of the peso weakening. It helps restore an equilibrium, right? Mm-hmm. So at the end of the day, as long as we run good policies, and these range from everything from helping our sectors grow, helping our industries become more competitive. The peso is, in the same way the central bank says, we manage volatility. We don't aim for a set rate. Then people will say, okay, then the economy will improve. So by itself, a weakening currency in terms of its effects is, as long as they're manageable, we don't see too quick. They'll correct.
As long as it's not too quick.
Yeah, they'll correct some of the imbalances. The only problem we have is sometimes if the imbalances can't be corrected even by a currency. Let's say we have a huge trade war, China-U.S. trade war, a big geopolitical shock.
Yeah.
Then we will get caught in that. We will get caught in that. Malaysia will be caught in that. Southeast Asian countries will be caught in that. That's something we just, you say, okay, if that's the adjustment we make, how do we make that adjustment?
And it will not just reflect on the currency, but in other
assets, in a wide range of assets.
But back to the Philippines in the meantime. You mentioned political noise a while ago. Do they matter? I mean, we've had Las Cañas coming out and all of these issues on extrajudicial killing, this drama in the mining sector, as far as the Senate is concerned. Senator De Lima is about to, we're just waiting for arrest warrant. Should they be a factor to how the peso is performing now?
I think they've been a factor. Obviously, as I said, they're not the determining factor now, right? But they have been factors because the perception that the Philippines has certain vulnerabilities, whether it is, President Duterte getting into a fight with what you call the elites in this country or the middle class over the drug war, whether it is because of how U.S. economic policies might become more nationalist and how they might, restrict immigration, so we suffer fewer H-1Bs, or vulnerabilities related to what happens in the Gulf, where if oil prices don't recover, if they fall too low, and our countrymen start losing their jobs. So there is the politics affects the perception of vulnerability. So at the end of the day, it's not going to change things overnight, but some people might say, okay, I'm going to hold a certain amount of Philippine assets. They'll say, maybe if the Philippines is seen as having all these risks, although they're not happening yet, I'll hold less related or, in comparison with me holding Thailand assets or some other emerging market. So the political noise has mattered. And how these things turn out, whether it is tax reform, whether it is the plan to change the constitution, whether it is the attacks against the president, they will all affect them in the future.
In the future,
it depends on how they turn out. So if the president has a high level of political support, no matter how you criticize him, even if there's noisy criticism, the sense will be, yes, it is noisy criticism. It grabs headlines, but at the end of the day, he will still be President Duterte. He will still do the things he wants to do, controversial as they may be. And we're still going to go this way. I think what really matters in terms of people's expectation is how tax reform proceeds, how our infrastructure development proceeds, how our ability to sustain growth in sectors that have delivered growth over the past few years, especially BPO, are sustained. Those are the things that will also matter. Because, and many of them are affected by politics. Some of them are affected by external factors that we have little control over.
So for those who are just tuned in, we're talking to Bob Herrera of the Neo Strategy. We've been discussing the peso, the sliding peso, currently the worst performing currency in the region. We've discussed the fundamental reasons, economic fundamentals at least, which is we focus on the current account worries right now. We don't have that much buffer to help us when there are uncertainties
or
all over,
shocks.
shocks all over, including the Fed potentially upcoming Fed rate hikes and issues in Europe and in the U.S. But now we're moving the discussion toward something more interesting, which is the political aspect to it. We were discussing about the tax reform, you said. Is it something that your clients have also been looking at?
It's probably for us the most important thing on the table right now in terms of economic policy. Because obviously you have all these questions about, President Duterte's drug war, et cetera. But for many of us, the big question is this: Philippines needs to continue to grow. To sustain.
And it's growing spectacularly.
Yes, and it needs to continue to grow. We've been growing the past couple of years based on a combination of factors that you can attribute to luck, to prudent planning.
Luck?
To some extent, luck. Okay.
Oh, that's interesting. Let me just pursue that a bit. Luck?
So yes, some of it is luck. You get lucky. You get lucky in the sense that you have an external environment that helps you grow. So we've been unlucky in the sense that oil prices have dropped, but when there was a change in administration from Macapagal to Aquino, a large amount of political uncertainty declined because Aquino came in with good numbers. So he came in, fair amount of political capital. People said, hey, this is a new administration that's not as controversial as the previous administration. Okay, regardless whether or not you believe the controversies to be real, and people started spending more. So it's just simply
yes, we've seen that in the corporate side aspect. We've seen their capex to levels that we have never seen before. We hear of announcements of 60 billion, 140 billion capex by SM or the Ayalas of this world, and it's just something that we've never encountered as business journalists here. So you're saying that
there was some pent up desire to spend, because we'd have to admit, whether or not you're for or against Mrs. Arroyo, President Arroyo, her administration was rocked by controversy for the latter half especially. So I think there was a certain amount of uncertainty, and when people are uncertain, they spend more, companies spend less.
Yes.
So when you had Aquino coming in, regardless of his merits, again, people said, okay, there's a mandate, there's a new mandate, and we're willing to spend a little bit more. We're less uncertain about the future. And the consumer spending, and to some extent some of the corporate spending, then started cascading.
Yes.
So as consumer spent, companies said, hey, people are spending more, let's invest more into real estate. And then you had the BPO sector growing.
True, yes.
And then you had, people criticize former finance minister Purisima for not spending as much, but then at the same time it led to a credit ratings upgrade, which lowered the cost of capital. So, all these things came together at the same time. So they led to the growth. Now, the question is, we've had PPPs, we have had BPO sector growing, we had strong real estate growth, we had strong consumer growth. So how do you sustain that growth is now the big question. And it goes to the question of tax reform, because we have the PPPs now being implemented, the skyway that goes from the south to the north. We have different projects that were approved during the previous administration. The new administration will approve its own projects. It takes time. It will take time to spend. It will take time to implement these projects. So you can't just fully rely on private sector PPP projects. Government will have to spend more in the meantime on the things that it normally spends on, whether it's upgrades in farm-to-market roads, upgrades in agricultural sectors. Finance Secretary Jokno has said agriculture will be high priority, and I'm sure Economic Planning Secretary Ernie Pernia also agrees with him. Yes. So to spend on that, they need the revenues, and those revenues will come from the tax reforms that they are planning. So the threat is, or the risk is, if the tax reforms do not get approved, then people will start asking, where will you get the spending money? If you don't have the spending money, then where will the spending come that is supposed to tide us over while we wait for PPP projects to be approved? So the tax reforms are very important. If they are not approved, or if they are watered down too much, people will say, you won't have the money. If you don't have the money, where's the growth going to come
Do you have like a scenario for the tax reform, on whether it will be successful
They're
or not?
promising a net gain of 160 billion. And the expectation is
Yes,
it will be approved sometime this year. As long as we're within that rough area, we're fine. Now, if there is a perception that, yes, it's being approved, but the revenue gains are what, 50 billion pesos, 60 billion pesos, then people are going to say, you know, but pa kayo naghirap? Parang all that effort for very little. So it has to show that there is a substantial revenue gain and that it will be achieved within a reasonable amount of time. Because, you know, the government might hold out and say, no, we are sticking, we need 150 billion. But then Congress resists, and it becomes a next year thing. And if it becomes a next year thing, then again, people will worry. So it's a question of how much do they get and how quickly do they get it.
More than, let's say, I mean, the tax reform package is getting more attention from your clients more than, say, the changes, proposed changes in the Constitution.
Because even the proposed changes in the Constitution are still, we don't know. When are those changes going to be proposed? What is the process? How quickly will, because if the administration brings the cha-cha onto the table now, while it is debating tax reform, can it, and then you have all these legislative measures, can it handle the same? Does Congress have the bandwidth to handle all of that? So at some point, either the mistake is to put everything in and then hope that something comes out, or the administration says, we'll first have tax reform done, and maybe move a little bit later on when it's certain towards constitutional change. We're not clear, the signals are not yet clear as to when they'll do it. So our clients are now saying, we're not clear on when charter change is going to happen. So right now, we can't even put a number that this is a second quarter thing, it's going to be this difficult, etc. That kind of thing.
Okay, but at least it's as far as what we can control factor is concerned, as far as the Philippines is concerned, it's the tax reform package that's having a lot of the attention, more than, let's say, the current account deficit or the peso exchange rate. Because
if we're talking long-term view of the country, yes, it's the most important thing. Like, because the current account, sometimes you can't control the things that go into it, right? If demand drops for our manufactured exports,
then peso
hopefully
goes down,
then the peso will help. But it's not something you can control. Unlike tax reform, it is an act of Congress, which they will act or not act upon. And if the perception is they will not act upon it, or they will not deliver the revenue expectations in a significant way, then yes, people's expectations about infrastructure will go down. And you need infrastructure. We all know we need much, much more than what we have right now.
And given all of those factors that we've discussed, where is the Philippines in terms of, you know, flavor of the month for the investors? For flavor of the year or the moment?
I think we're still there. We are still we still have good growth. The growth that we've seen in the past year will probably continue well into later this year or early next year. I'm not an economist, no, but these are the expectations. So as long as we are seen as proceeding on these changes, implementing tax reform, spending more on the countryside, spending more on infrastructure, people will, you know, despite the noise, say, okay, this is not going to blow up in a bad way.
Despite the political noise,
because I think the political noise is this. It's noisy. It's unavoidable. You know, President Duterte is a controversial president, whether here or abroad. But he still has a good base of support. People, I think, the gut sense we have is, people are saying, yes, we know it's controversial, but it's almost like we are still willing to give him the benefit of the doubt. And, you know, there are some people who don't like him, but I would say a big bulk of the population has that attitude that there are some things we're not happy with about, you know, how things are proceeding, but all things considered, he's not seen as on only one issue. He's still an acceptable president for a significant part of the population. And as long as there's that kind of support, the risk of something bad happening is quite low. Now, the big problem is if we're not seeing certain things, but I don't think we're not seeing certain things in that regard.
Okay, on that note, thank you again, Bob, for joining us. This is Lala Rimando. Join us again in the next Rappler Talk.